have Safir Anand, an ace investor himself, and of course we have Harminder Sani from Wazir Advisors, who knows the retail and e-tail space very well in India. Safir, I'm going to come to you first. What do you make of this on the face of it? Are you surprised as someone who tracks Berkshire Hathaway? Is it the perfect opportunity for them to capture a bigger slice of the India story? What do you make of this investment?
Hi, and thank you for having me on the show. I was initially surprised when I read about the news in the papers today, but having analyzed the dynamics of the deal, it appears to be a more thoughtful deal, and it's something that I think will be very beneficial for Berkshire Hathaway in times to come.
Safir, a quick follow-up. Why would you say it's a very thoughtful deal, and in what ways is going to be beneficial? Because if you look at Berkshire Hathaway's record in India, I mean, they are present through their investment in Tegu Tech. It has a facility in Bangalore. They had a partnership with Bajaj Alliance, but I think that really did not go forward because of regulations in the insurance space. So what has sort of made you feel that this is a well thought out investment for Berkshire? Why does it make sense for them?
Yeah, so I cannot talk about why Berkshire was evading India for all this while, and there may have been multiple reasons, including possibly the size of the market and a lot of history of consumer companies in India where Warren Buffett may not have directly owned, for example, those India businesses, but may have owned their international businesses, like he owned Gillette, just to give you an example, or he owned some other companies. But what is very interesting is that Warren Buffett is likely to have studied the business model of Alibaba, and particularly Alipay, which recently raised capital in China. And Alipay did a capital raising at a valuation of about $150 billion. And to a large extent, this company that he's intending to invest, if this deal does materialize, is substantially on the same lines as the Alipay model. So Warren Buffett has always been fascinated by a few things: cash flows, ability of the companies to penetrate, consumer, the size of the market. So it's a sort of a good match between his desire to enter India and to bring a combination of technology, finance, and consumer in one world, and also to sort of compare it on a comparative basis, to have a $150 equivalent business, $150 billion equivalent business in China available to him at a $10 valuation, $10 billion valuation in India.
Right. In fact, if you look at Paytm shareholding today, it's dominated by Ant Financial and Alipay. The second big investor would be SoftBank. Then, of course, they have Saif Partners and Vijay Shekhar Sharma himself, who owns less than 20%. But that's a very compelling combination: consumer plus finance plus tech. And I think that's the arc that Paytm has been playing at, and all these three aspects at scale should be a compelling combination, even though they are not profit making as of now. Harminder, what is your take on this? I mean, clearly it will be a huge shot in the arm to have someone like a Warren Buffett to count as an investor. But what does it mean beyond that? What will it mean for the startup ecosystem?
See, two things. These are very interesting times, and we are seeing now, after Walmart, now Warren Buffett coming from US, making this investment in Indian, I would say, financial tech or consumer tech. Paytm is a fairly wide spectrum company from that point of view. Well, the second point, which you said, that having Warren Buffett as an investor, you shot in the arm. But from Paytm point of view, if you look at it, Warren Buffett in a way is a follower here. Some of the marquee investors they already have on their cap table. So I think it's a great endorsement to have. But from the other point of view, if you really look at it, that somebody who should have been, or Americans who should have been leading some of these investments in India, I think now they are following the Japanese and the Chinese investors in India. That's the interesting point to see here, that they couldn't find anything else to bet on and compete with the Chinese or Japanese investment. They actually are joining hands with them to play the game. So I think for the startup ecosystem, if you really ask me the question from there, yes, it's very interesting to happen. But at the same time, it's like there are very few companies where such big investors wanting to invest large amounts of money are just not able to find companies where they can make their own big investments independently. They all have to appear on the same cap table, crisscrossing each other. So that's actually not so interesting if you really think from a startup system point of view.
Right. Safir, one more way to look at this, is this Warren Buffett's bet on Alibaba rather than Paytm? I mean, this is one way of collaborating with Alibaba, considering they are the biggest investor in Paytm. They've also come in as an investor, and they are expected to play a big role in Paytm Mall. So should we see this as perhaps Berkshire Hathaway's bet on Alibaba more than Paytm? Because Paytm and Alibaba will be to India, what an Amazon is to the US in a sense. I mean, though Amazon is also a big competitor here. Should we see this as a Berkshire bet on Alibaba more than anything else?
So are you asking me? Sorry.
Yes, Safir.
Okay, I'll go ahead. That's an interesting point, and I won't analyze it purely as that. There is no doubt that Alibaba has a great credibility, and Warren Buffett goes by the credibility of management. So, in a sense, this would be a little bit of credibility of the largest investor, a combination of Alibaba, a combination of SoftBank, a combination of the India role, etc. But I also feel that he also has the tide going in his favor as far as the government of India is concerned, because post demonetization, this business of Paytm has got a real trigger. And therefore, in that sense, the move of India away from cash currency into digital is something which also has a de facto role, of sort of the desire of the government. So, unlike businesses that are heavily regulated, what is happening right now with the currency wars, for example, and anti-dumping duties and things of that sort. I feel that this business is not of a kind that is subject to anti-dumping duties or fluctuations in metals and oils and things of that sort, which or even currency for that matter. To that extent, it's something that is going with the tide, and it has the consumer angle, which becomes fascinating, because I believe, as per the last statistic shared by Paytm, they already have 300 million plus users. So, the ability to reach out through 300 million plus users and do cross-selling of products is quite fascinating in that sense itself.
Right. Right. And Harminder, should we also increasingly look at these companies not as multiple parts, but the sum of many parts? Because, you cannot just look at Paytm today as a UPI player, or as a wallet, or as a payment bank, or as an e-commerce marketplace, or as a platform that sells everything from bikes to gold to insurance to mutual fund, but as a combination of all this. So from that sense, is this the best way for Berkshire to get a bigger slice of the India consumer story? The culmination of tech plus finance plus consumer that Safir alluded to.
Yeah, I would feel that. I would feel that because in India, given the market is still very small as compared to China, because it's not just the market capitalization numbers which are large in China. The market itself is very large. That's why the companies are valued 15, 20, 30 times of Indian companies. So yes, that's the reason people are looking for, like in the private sector or in a offline businesses, old industrial traditional businesses, companies which are conglomerates, right? Even if their companies are separately listed, but there are business houses who are valued more, and we are seeing in the stock market that those large caps are getting far more valued. So whether it's a Reliance or whether it's an HDFC, I would say at different spectrums, but they are being valued far more than the companies who are independently focused on one single businesses. So same is true here as well, that the people who are successful, who have found a way, created platform, have millions of consumers, and are doing everything. So just to put this kind of money, they need that kind of large players. But the specialist independent companies will be too small for such large investors to be able to invest into. So I think that's one of the reasons. And just to your earlier point where they're saying, is it indirectly a bet on Alibaba? The amount of cash Berkshire Hathaway is sitting on, if they want to bet on Alibaba, I think they have enough cash to bet directly on that. So I think this is a bet on Indian story. My only point earlier also I was making that it should have been some other company competing with Paytm who should have been getting this market investor to come in and make investment in them. And these 2, 3, 4 companies competing for the Indian market, that would have been far more interesting. In this case, the same company where all the leading investors from all parts of the world seem to be putting money because they don't have any other choice. So India's story is large. India's story is interesting. Large investors are interested to invest in, but there are not that many companies to receive that investment.
Right, right. So a lot of funding essentially getting consolidated in the same 2 to 3 players. But considering internet has been a winner takes all kind of play, it's still good if India has 3 consortiums instead of 1 that we've seen in America and China. So perhaps we will have a Flipkart plus Walmart versus an Amazon versus an Alibaba plus Paytm plus Berkshire. But Safir, the last word to you. A criticism of Indian conglomerates in the last few years is that they've been sitting on huge cash piles, but they haven't invested early enough in the India digital story. So if you look at the first phase of e-commerce, it's been fueled largely by hedge fund money and Japanese and Chinese investors. And in the second phase, we are seeing the big American giants coming in, not just Amazon, but also Walmart and Warren Buffett. Where does this leave the giant conglomerates in India? They've tried to do some stuff on their own. It hasn't really scaled, to levels that one would expect. So were they a little too conservative perhaps in, latching on to the digital story, the e-commerce story, because people have dismissed this as loss making and cash burning and things like that?
So it's very interesting that in my professional role, I do a lot of talks in terms of intangibles, and I repeatedly make this point that how value is migrating globally away from hard assets into intangibles. A lot of companies in US today that have valuations which are akin to, say, a Coca-Cola or a Kodak or any General Electric, and in many cases even surpass those valuations, have come with very strong business models, and business models are a part of intangibles. I mean, to think that Facebook has a valuation in excess of 500 billion and an Uber was raising capital at close to 70 billion seems to suggest that these models are very strong in terms of intangibles. And India has had the Indian story has missed the importance of intangibles for a substantial part. Initially because it was controlled by government licenses, and it was a fairly sufficient Indian market where you could cater there. And as India became more competitive, it went on cost cutting rather than bringing in new age technologies. But I think that a lot of that is changing, and it's not only visible, it will get visible in case studies of success like the Paytm model or the Flipkart model, but also it will happen on the equity side. By similar analogy, India doesn't invest much in equity and still believes in buying hard assets like land and machines and all those things, which are likely to change as people get more akin to safer and more consistent returns, and the magnitude of those returns more than anything else.
Right. Thanks so much, Safir and Harminder. We've spoken about those 3 international backed consortiums, but let's not forget about Reliance and Reliance Jio, because Mukesh Ambani has been talking about digital and data so many times in his recent AGMs. So that's going to be the big elephant in the room. Can Reliance, take on all these giants and come up trumps? Will local policies favor them? Because there's a lot of tilt towards domestic winners as far as the draft e-commerce policy is concerned. That's going to be an interesting battle that will play out. So will Mukesh Ambani be the main person to target as a rival as far as these consortiums are concerned? That's something that we'll have to wait and see. But thank you both so much for joining us and analyzing this development. It's really going to be huge once it becomes official.